Today we're going to be going over some guidelines and patterns for helping you understand if your Elliott wave count is correct. Of course, these are all guidelines, so they don't have to apply, but typically you want them to. And if they don't, it might be a really good sign that your count is wrong somewhere. So if you've made it through all 7 parts of this tutorial series before this, you've learned about all the different types of waves there are, and in the previous video you saw a live Elliott wave analysis of Tutor, me putting a count on it and trying to understand where we are in the large scheme of things. When we were previously recording this, I said our bottom might be in at this $20 low here, and that we were headed up to the $54 range. While we're not quite there yet, we've made a substantial move upwards, and I do think we're on progress for that. But anyways, that's a little sidetrack. Let's get into today's topic. The first guideline we're going to go over is something called Orthodox tops and bottoms. Now, this doesn't really help you get waves correct. However, it will help with measurements. What this concept states is that sometimes the pattern's end differs from the associated price extreme. In such cases, the end of the pattern is the orthodox top or bottom to differentiate it from the actual high or low. Now, that's a lot of words. Let's dive into an actual example of this. Let's look at the first impulsive move we drew on Tutor. This 1, 2, 3, 4, 5 on the larger scale here. I'm going to zoom in to just the 2 wave here. Now, if you really examine this, you'll see that I drew our 1 here, but then we have this price up here that comes above our 1 wave, which is all part of the 2 wave here. We have this as an A, B, C, where this is an expanded flat. As a result, even though this is our price extreme before moving downwards, this right here is our orthodox top. So when we're measuring the length of waves and drawing channels, as you'll see today, you need to make sure you're using this top and not this one. The next guideline we're going to talk about today is the Guideline of Alternation. Now, this guideline is extremely important and is almost always accurate. What this guideline states is that alternation is basically a law of markets. So let's split this into impulses and corrections. First off, let's talk about alternation within an impulse. What exactly do I mean by this? Basically, what this guideline is stating is that if wave 2 of an impulse is a sharp correction, we can expect wave 4 to be a sideways correction, or more slower, and vice versa as well. One exception is that this rule doesn't apply to diagonals. That's really important to keep in mind. So let's dive into the subdivision of this third wave right here to see what I mean. We have this labeled as 1, 2, 3, 4, 5. If you just look at the 2 wave here, you can see it moves downwards pretty fast. And also, if we just measure the depth of it, pulling Fibonacci, you can see it comes close to that 61.8 or 61% retracement. Let's compare that to the 4 wave. Our 4 wave here is very slow. It takes quite a bit of time. And now let's measure the depth of it. Now, just like how back with the 1 wave, this was our orthodox top, even though we had a price extreme, this is the orthodox bottom of the 4 wave. It's the end of the pattern here of the 4 wave, even though we have a move that goes lower. So when we're measuring our retracement, we want to make sure we're checking the end of the 4 wave, not the end of the A wave of the 4 wave here, where this is labeled as A, B, C of a 4 wave. So pulling our Fibonacci from the bottom of the 2, top of the 3, you can see our 4 wave doesn't even come to the 38 or 38% retracement. So in summary, this 2 wave is sharp downwards and deep, and this 4 wave is clearly sideways and not deep. They are alternating in pattern. The second place that this rule of alternation applies inside of an impulse is actually with the waves that subdivide the impulse itself. So the 1, the 3, and the 5. More often than not, we have a 1 wave that's short, a 3 wave that's extended, and then a 5 wave that's short again. So short, extended, short, or alternating patterns once again. And to really put the cherry on the top, the 1 and the 5, when the 3 is extended, are almost always the same in both time and magnitude. So let's check the measurement of the 1 compared to the 5. We'll use our trend-based fib extension tool, click at the bottom of the 2 and the top of the 1, and then click at the bottom of the 4 again, and just pull this over. And this 1 right here is 100%, which would mark exactly even lengths. You can see we're only a couple pennies off from that being true. Now, with the time aspect of it, I find that this more often than not actually doesn't work out that well time-wise. Personally, I ignore time when I'm charting for the most part. It still needs to look good, and we wouldn't want our 5th wave to be, say, 5 times longer in length than our 1 wave, but just eyeballing it, the length from here to here in time is close enough from here to here. So now let's talk about alternation within corrective waves. This is basically the exact same thing here. If the A wave of our correction is a zigzag, we'd expect the B to be a flat and the C to be a zigzag again. And the other way around, if the A is in a flat, We would expect the B to be a zigzag and the C to be a flat. So let's look at the W wave of Twitter that we previously charted. The A wave here ends up being extremely sharp, a really deep correction. The B basically just moves sideways and doesn't move up very much at all. And the C ends up with another very sharp move downwards. And just looking at the time here, the length from here to the end of the A and here to the end of the C looks pretty close to me. They look almost exactly the same. The one difference here is that the A is already so deep that the C actually doesn't end up being the same length of the A. So when this happens, the other really common ratio between the A and the C is the 618. So if we just measure the length of the A, pull it to the B, you can see that the C is really close to coming to that 618. Next up, let's speak about the guideline on the depth of correction waves. The primary guideline here is that corrections tend to register their maximum retracement within the span of travel of the previous fourth wave of one lesser degree, most commonly near where the fourth ended. So again, I know that's a lot of words in the guideline here. Let's put it to a real example. I'm zooming over to the real-time look at Twitter, the most recent part that we charted. How could we have known that this was potentially the bottom here? Well, if we use the guideline that we just talked about, we'd expect this move to retrace to the bottom of the previous fourth wave, so the fourth wave of the impulse that brought us up here. So we have our 4 labeled as an A, B, C right here, and this is the bottom of our fourth wave. We would expect the price to come all the way down here, though falling anywhere inside of the fourth wave is really what the guideline states. This is just trying to be more precise with it. So if we just create a box around our fourth wave here, capturing where we would expect our price to retrace to after we've already peaked, and pull it over, this is the area we would have looked for our retracement to fall into, and you can see that it most definitely does fall into this before we head upwards. Now, you're probably looking at this and thinking, well, great, you gave us a $4 range that this price could fall into. That doesn't really help, it's so wide. And you're absolutely right. However, we can use other things to figure out where this might have ended as well. For example, we could use a Fibonacci retracement, pulling from the start to the top, and just looking over, we know that the 50 or the 618 are our two most common zones. However, we can see that the 618 and the 65 fall outside of this box here, so the 50 is absolutely the key spot we would have been looking for. And you can see we tag this 50 and go just a few pennies below it before the real bottoms kicked in. Now, there are a couple exceptions to this rule of the depth of corrective waves. First off, if the first wave is our extended wave in our impulse, we can expect the correction to come down to the second wave of the lesser degree. Now, first wave extensions are pretty hard to come across, especially when you're looking outside of diagonals. So I can't find a real example of this right now. You'll have to just take my word for it. I'll show you what it looks like with a drawing. So if you have a pattern that looks like this, where the one wave is clearly the extended wave, it's the longest wave, you can expect that the ABC correction that comes afterward comes down to the price territory of this 2 wave here rather than this 4 wave. The other exception here is when the 5th wave is extended. When the 5th wave of an advance is an extension, the correction is sharp and finds support at the low of the 2 wave of the extended 5th itself. So if we look at our major move up in Twitter that we have labeled 1, 2, 3, 4, 5 here, you can see that the 5th is extremely longer than the 3rd and the 1. It's an extended wave. So without getting too picky into the details here, if you try to look at the subways of this extended 5th, you can clearly see that the 1, 2 is right here. We don't really know without zooming in where the 3, 4 falls, but for the purpose of this, it's not important. I'll just say it's up here somewhere. So what this rule states is that the 2 wave of the extended 5th itself, or this wave right here, the bottom of it will act as support on our way down. Now, if you look at this closely, you can actually see that it's still, of course, inside of the larger price territory of the 4 wave. However, it's just trying to pinpoint a bit more of an accurate location where we're going to find key support. So if we just draw a line where that 2 wave ends, you can see that when we started to come down, this did act as support pretty strong. And yeah, we did end up breaking through it to find our final low here, but we bounced off of the support so many different times here. And even when we came back, the bounce below it, but we found support here again. So while we would have expected our price to actually be done there, it was a very close prediction overall. The next guideline we'll speak about is channeling. Now, channeling is extremely useful for trying to predict where the next wave is going to come in, specifically the 4th and 5th waves. Whenever we think we have the first 3 waves of a move put in, we can draw a channel and start to predict where the fourth wave will come in. For this, let's look at euro to the dollar. I have this impulsive move off the March 20 lows here that we clearly pushed off of, identified as a 1, 2, 3, 4, 5 here. So let's take a step back and say that we only had 1, 2, 3 and price is hovering up here now, or maybe we started to move downwards and we're getting a little bit of confidence that our third wave is in. What we would want to do is grab a parallel channel and draw from the top of the one wave here to the top of the third wave up here, the price extreme we just put in. We'll click that, and then we'll click this bottom line at the bottom of the two wave here, this wick right here. Now if we pull over this channel to extend it, keeping it in the same spot, we'd expect the 4 to fall on the bottom of this parallel channel. And you can see that we actually wicked down and touched it almost exactly on. I bet if the lines were drawn a little bit closer, it might actually be dead on here. So now moving forward, we saw the price come down, put in a wick here, and start to push back up. We're pretty confident that we have our fourth wave in, and we've started to move upwards. We want to look for where the fifth wave is going to come in. For this, there are actually two different situations. Number one is that that fourth wave really did land perfectly on that channel, and in this case, we do have that. When this happens, we can leave our channel be and expect the fifth wave to come and hit the top channel here as well. And you can see that even though we just had a tiny wick over it, that's basically where our high landed before we pushed downwards. In the second situation, your parallel channel might have been wrong. Let's say the 4 did end up coming much below the parallel channel. You'd want to then adjust your channel. So what you would do is you would redraw it from the bottom of the 2 wave to the bottom of the 4, the most recent one we had in. Let's say it fell all the way down here somewhere instead, breaking through our original channel. And then you'd want to click this at the top of the 3 wave. So this would hover above the 1 wave there because we're connecting it to the 3 and with our 2 and 4. And the top of the channel now would be the prediction for the 5th wave. So in summary, when you're trying to find the 4, connect the 1 to the 3 and pull it onto the 2. And when you're trying to find the 5, connect the 2 to the 4 and pull it to the 3. Now there is one exception to that as well. If you have an extremely extended third wave, a parallel channel off of the 2 to the 4, hold on to the 3, is going to predict a 5th wave that's just way too high in the air. So let's look at a drawing example of this. Let's say our chart looks like this, where the 1, 2 is pretty small, and then we have a massive extended third wave here. We're looking to find out where the 5th wave is going to end up coming in. So without this exception, we'd be pulling a channel from the 2 to the 4 here, and pulling it off of that third wave up there. Now if you just look at this, that would be predicting that our 5th wave comes all the way up here, basically being the exact same size as the third wave, and that's not really realistic. So when this happens, you can actually adjust and pull the top of the channel to the top of the 1 wave instead. Now we're going to have to extend this to the left to get that to fit properly, pull this down to the top of the 1 wave, and if we continue this channel, this is more reasonable for where we'd expect the 5th wave to fall. Now channeling works exactly the same way in corrective waves as well. So let's look at the X wave of our correction on Twitter. When you're channeling zigzags, you want to pull from the start of the A wave, or the previous low that we had, the end of the previous wave here, to the bottom of the B wave down here, which we have as this mark right here. We'll pull this over and then we'll connect it to the top of the A wave there, this wick right in there. So this would be once we had the A and the B in, trying to predict where the C is going to be. And we'd be looking on this top channel somewhere. And you can see that we come almost perfectly to the top of that before our huge reversal downwards. Now these channels aren't always perfect, which gets us into the next guideline, throw overs or throw unders. Basically what this means is that we're going to miss the channel either by going over it on our 5th wave or by coming way too short of it. We can get a good idea of which one we might see by looking at volume. So if the volume is heavy, it's pretty likely that we're going to go above the upper line or throw over the channel. And on the other hand, if the volume is light, it's pretty likely we're going to throw under the channel. So let's look at our strong impulsive move on Twitter once again for this. We're going to try and channel this, pulling from the bottom of our 2 to the bottom of our 4, and pull this to the top of the third wave here. So you can see that we ended up going above this channel before we came down, used it as support, and then died off right after it. So to get confirmation that this is actually a throw over and we're not just miscounting it, you'll want to look at volume here. So if we look at the volume in the bottom here, you can see it's pretty low all the way through this entire 5th wave. However, right here, the volume really starts to pick up. It explodes to levels of volume that we haven't really seen since all the way back here in March relative to June, 3 months ago. and this is when we're getting all the way up here, closer to the top of the channel. This is a good sign that we're probably going to throw over this channel, and volume continues to stay high. We actually do end up throwing over the channel, right in here. So those are some additional guidelines you'll want to write down and make sure you keep in mind when you're drawing your Elliott wave. I hope you learned something today, and if you did, please do click that like button. And if you want to see similar content to this, make sure you hit that subscribe button. It really only takes you a few seconds, and it does help me out a ton, so I would really appreciate it. And lastly, if you want to see part 9 of this tutorial series, let me know in the comments below.